Viacom CBS dropped its earnings Wednesday afternoon after the market closed, and they are now called Paramount. Big surprise. The name change comes as the company tries to rebrand itself and coalesce several of its various entities. And we have some amazing details in the earnings report, something not often seen from other Hollywood-based entertainment companies, film and television production, which I really like the breakdown they've done. We're going to get into that in just a moment because one of the things they talk about is some of the specific theatrical revenues that were brought in. And of course, if you have been watching this channel and some of our box office breakdowns, which we're going to be getting back into soon as the movie theater season is now starting to heat up again for 2022. But we talked about some of the wild disparities that have happened over 2021 regarding theatrical releases. Were they getting exclusive theatrical releases with no strings? Were they getting 45-day or 30-day exclusive windows? Were they getting 17-day exclusive windows in the cases of certain films? Or were they going right to day-and-date release with the studio's own proprietary streaming service? Well, this report, I promise you, sheds some amazing light, and it actually confirms a lot of what I've been telling you for some time now. So stay tuned. We're about to get into this right now. Renegade Online. Well, welcome back, folks. Another great day here at Valiant Renegade. Good to see everybody out there. And of course, as always, in the beginning of the video, we ask that the 60 or 70% of you watching out there, I know you're there watching this right now, that maybe are not yet subscribed to this channel, please go ahead and subscribe. Hit that subscription button, hit that notification bell, like this video. Of course, if you do like it, share this sucker out on the social medias, and do leave a comment before you head out the door today. So we're going to talk about Paramount, formerly Viacom CBS. Not only has the company changed its name, they've also had a ticker symbol name change on the NASDAQ where they trade. It's now P-A-R-A, just as an aside for anybody who cares about that sort of thing. But I want to talk about one of these articles that we have here from Deadline magazine, and then we're going to go in to the actual earnings report from Viacom CBS, again, now Paramount. I can't stop saying Viacom CBS. I've been saying that too many years. It's hard to say Paramount now. I'm going to have to get used to that. But we are going to get into some of those figures in there. We're not going to cover every single number. That's going to get too boring. But there is some very interesting things that they put in there, and there's some very interesting things they left out, particularly about supposedly a very popular brand of intellectual property that they have on Paramount Plus. I found a little interesting that it wasn't there. So we'll get to that in just a moment. So let's talk about Deadline magazine's article, Viacom CBS shares tumble 20% the day after Paramount rebrands. Now, as I've said before, when we look to put Hollywood and the entertainment industry through the business lens of reality, right? We try to take our favorite movie studios, our favorite television production companies, and see, what are they really doing? What's driving the shows and the movies that they're putting out that we like to go see, right? Well, why would Paramount suffer such a day like this after having a relatively good report? They had very good growth with Paramount Plus in 2021. Their television broadcasts, they have some of the best sports contracts out there. They make a good bit of money. It's all about where things might be going. And of course, since Paramount Plus, even though they had tremendous growth in the year, greater than expected, some of the concerns out there seem to be centered around how much Paramount is going to have to spend, how many billions it's going to have to spend in the next several years to continuously generate content to feed this beast. And not only that, billions more on top of that, just to market it, to bring in new subs. This is a problem that places like Netflix, Disney Plus, HBO Max, they all suffer from the same issue. It's not just the cash burn they have to actually produce new content. It's almost the same amount over again that they have to spend marketing to bring in these new subscribers. Streaming services are an incredibly expensive and risky endeavor. And a lot of these companies, obviously, once they get into it, they're starting to figure it out. We have seen places like Disney Paramount as well, Netflix, Amazon, on and on and on, where they go in thinking, hey, we're going to spend $3 billion on producing content, and then they turn around and decide a quarter or two later, nah, we're going to spend about $5 or $6 billion. This has always been a concern. Of course, Paramount Viacom CBS has had its issues up to this point, so this was a little bit more fuel to the fire. But let's look at the article. The company changing its name to Paramount has its supporters, but one of the analysts lowered their 12-month price target to $40 from previously $53. Now, again, you can take that for whatever you want it to mean. It's currently trading around $30 right now, and last year it was over $100. So what do you make of that? Sherry Redstone, CEO Bob Bakish, and the company's key operating execs previewed a raft of new content, and this is the key part, from the first Sonic the Hedgehog original live-action series to Teen Wolf from MTV Entertainment Studios and MGM's Orion Television, and took questions from Wall Street in a virtual investor day almost a year after the launch of Paramount Plus in March of 2021. Now, that's a key kind of figure. This is a very young service, right? And I know it was CBS All Access, and then they changed the name, and they rebranded it, and they brought in some other things, and they've been fiddling around back and forth. Do we bring in the Paramount Network from TV, and do we merge this and that? I think all these signs that we've been seeing over the last year, and this earnings report they just had, seems to suggest there's going to be more of a consolidation with a lot of Paramount's networks, their linear content, and their DTC direct-to-consumer product now called Paramount Plus. So let's talk about some of the numbers, because this is where things kind of get a little bit more interesting. Direct-to-consumer losses should widen from $1 billion last year, 2021, to about $1.5 billion in fiscal 22, and get even steeper in 2023 before starting to improve in 24. With content expense, and this is what we were talking about, producing these shows that go on the streaming service to bring in the new subs, before marketing, of course, jumping from $2 billion last year to $6 billion that year. The company anticipates 100 million streaming subscribers in 2024, well ahead of initial forecasts. So their growth has been very healthy. We're going to talk about some of those numbers, but they're expecting 100 million subs within the next roughly 2 fiscal years. That's a big, bold piece of guidance there, folks. Paramount apparently thinks that they have a lot of good stuff coming and that they're poised to make gains. There may also be some other reasons behind that. We're going to talk about those as well. So this is the actual earnings report that Viacom CBS made public Wednesday afternoon following the market close. And I have to give them credit. This is one of the most attractive, eye-catching, eye-pleasing reports that I've ever looked at. Usually you just get balance sheets and it can be kind of boring, especially for the layman out there. We actually get a nice, colorful chart and things, and we'll go through this in a minute. And I want to talk about some of the things that are here and some of the things that are not. But let's talk about the highlights that they start with in this report. Remember, these are the key pieces of what Paramount Plus, or Paramount, excuse me, I still can't get the name right. This is what Paramount believes were the biggest driving factors for 2021 for their company, and especially for Paramount Plus. Total company revenue increased 16% year over year in Q4. Lovely. Quarterly global streaming revenue grew 48% year over year to $1.3 billion, driven by strength in subscription and advertising. Because Paramount Plus not only has an ad-free tier, of course, they also do have a lower price tier that does come with advertising. And again, I'm going to remind everybody, I've been saying this, and this is going to happen. You're going to see this across the board. I think even at some point, Netflix will breach that barrier because they're getting to a point now where if they continue to raise their pricing based on an ad-free model, they're going to start pricing more and more subscribers out of the market. I think there's going to be an ad-based tier at some point. Might be 2, 3, 4, 5 years down the road, but I think it's coming. I think the same thing's going to happen for Disney Plus here in the U.S. as well. A record 9.4 million additional global streaming subscribers, overwhelmingly led by Paramount Plus, to reach over 56 million subscribers in the quarter and achieved 84% year-over-year growth in streaming subscription revenue. Amazing numbers, all great so far. This is where things get interesting, and I'm sure there are some fans out there of a certain star something sci-fi series watching this. Fueled by a diverse, and this is about Paramount Plus, fueled by a diverse global content offering. Subscriber acquisition and consumption on Paramount Plus accelerated, driven by original scripted dramas 1883, which of course is the precursor to the very popular show Yellowstone, and Mayor of Kingstown. Family-friendly films such as Clifford the Big Red Dog, which was virtually a day-and-date release, or it was, I think, a day-and-date release as well. We're going to get to those theatrical numbers in just a minute. And live sports with the NFL on CBS. There's something missing from that list. Why? What could that be? I don't know. I believe there were 2 brand new Star Trek shows that came out on Paramount Plus in the fourth quarter, no less. I believe we had season 4 of Star Trek Discovery, and I think we also had a new show called Star Trek Prodigy. I find it very interesting that as the shows that have led the growth on Paramount Plus, that neither of these Star Trek shows seem to make it on the list. I wonder. But I digress. The Pluto subscriptions, which of course Paramount also has a majority stake in, or they maybe own it all. I can't remember off the top of my head right now. Monthly active users reaching over 64 million. Revenue growth by 45% year over year. All that's great. All that is wonderful. But again, they suffered a pretty bad result, at least as far as investor sentiment seemed to go. And a lot of that, I think, had to do with the expectation of how much cash and perhaps debt they're going to have to take on, the cash burn that they're going to have to go through to continue this rate of growth. That is to say, again, to make more and more and more and more content and spend more and more and more money on advertising, billions more a year on advertising, billions on production. And I think that's some of the fears that are out there right now. Now, whether or not those fears actually come to fruition is another conversation, but that's not one we're going to get into here because, hey, look, financial analysis of stuff like this as far as, investments, that's not at all what we do here. We're just looking at this purely from a fan and Hollywood and business entertainment type perspective. So let's go down into some of the breakdowns because I really appreciate what Paramount did here. Not everybody does this. If we look at Disney, which we've talked about, if we look at HBO, AT&T, which we've talked about because of their streaming service, NBC, Universal, Comcast with their television and movie production side, not all these places give you a lot of detail. And it's simply because they don't have to. The Securities and Exchange Commission has a set of rules and guidelines that when you make an earnings report for the public, you have to hit whatever their key points are, usually based on GAAP, which is generally accepted accounting principles. So that is to say that if you're an Office Depot, for example, it's not as if Office Depot has to report how many boxes of staples or paper clips or how many reams of paper they sold. No, they just have to tell you our total sales were this. Maybe they'll break it down into saying, hey, our printing and shipping services did this and our retail sales did this. But beyond that, usually there's no mandate that says you have to give out nitty-gritty detail. And the reason for that basically is even though it's a publicly traded company, it is still a private corporation, right? It's not a publicly owned in the sense of a government owning it, right? It's publicly traded, which is different. It means any individual person can go buy stock in that company. But what it means is this allows companies to retain a level of corporate secrecy or corporate security. They don't want to give out trade secrets. They don't want to divulge too much information because of competition issues. There are certain things they want to hold close to the vest in order to remain competitive. So that's why. But occasionally we get stuff like this that, a company like Paramount feels comfortable enough, hey, we're going to let you know these numbers. And they don't break it down by movie in this case, but they do give us a lot of good data to really look at. So let's talk about some of that. And we look down here, Q4 and full year 2021 results. You've got advertising, which is, their total revenues for 2021 was about $8 billion in the fourth quarter. The whole year was $28.5 billion. Advertising, affiliate revenues, meaning like your local CBS affiliate in the town where you live. If your CBS channel is channel 5 or something like that, that's the affiliate revenues that's coming in from advertising there. Of course, you've got streaming revenue. You've got theatrical, and that's what we're going to talk about. $241 million of theatrical revenue. Let's stop right there for a second, because we have talked about some of the problems in 2021 with the way that theatrical distribution companies are releasing films to try to bolster their own streaming services. And the fact that I posited to you, there was no way that this was not hurting them in terms of their shares of theatrical revenue. If we look at this theatrical revenue for the entirety of 2021, $241 million. Well, I went back and looked. Paramount had 4 major releases in the theater during 2021, the biggest of which was A Quiet Place Part 2, clocking in just shy of $300 million global cum. And then, of course, they also had Snake Eyes, which, do we even need to say with Snake? No, we don't even need to talk about that one. Now, apart from that, we also had Clifford the Big Red Dog and Paw Patrol. So the bottom line is that Paramount distribution, theatrical distribution, had a total global haul, gross cumulative haul, meaning money to the theaters at the box office, of roughly $582 million, just a hair north, of $582 million. And how much did Paramount get in revenue from that? 241. Ergo, Paramount got about a little over 40% of the total global box office haul for those films came home to Paramount. Theaters, international distribution companies, etc., kept the rest. And the reason for that is a relatively low figure. We usually see that kind of figure closer to at or over 50%, depending, of course, on where the bulk of the revenues came in. Was it domestic, which is a higher share, or was it international, which is typically a lower share, usually closer to around 42 or 43%, according to industry experts like those at Deadline Magazine. But of course, with this, it certainly suggests that the total haul was looking like everything came from international, which of course it didn't. Why was it so low? Again, it was because they made the choice to sacrifice some of that theatrical revenue sharing back to the theaters in order to have the ability and the rights to put these films, onto their streaming services sooner than normal. Now, A Quiet Place Part 2 had a typical, not quite typical, but at least it had a more typical, it had a 45-day exclusive window. And then when it got towards the kid movies like Clifford and Paw Patrol, those things pretty much landed on Paramount Plus date and date with the theater. So, of course, the revenue sharing on those films was far lower because of that. They were willing to sacrifice that. And the proof's in the pudding. I've been telling you this all years. When you have companies like HBO Max, or in this case like Paramount, that were putting their films on streaming services the same day they hit the theaters, they were not getting anywhere near the same deals as, say, someone especially like a Sony, who had exclusive theatrical runs, did not hamstring them. I promise you Sony's numbers are much better in terms of percentage of revenue and over the gross haul. What we're seeing here from Paramount and what we would see ostensibly from somebody like HBO Max, even Disney in that case, which of course had, as we reported before, a $98 million operating loss for that quarter, or for this recent quarter from theatrical, and also some television distribution revenue that offset that. But that was because of poor performances at the box office from things like Encanto, which is now, as I understand, going back to the theaters, which is great. And of course, The Eternals was the other big problem they had. Now, here's another great page that kind of shows some highlights on the streaming revenues they have. Okay, total company revenue up 16% year over year. Streaming revenue is up 48% year over year. Streaming subscription revenue, of course, that's the hard dollars that you pay out of pocket, your $5 or $10 a month that you're paying for Paramount Plus. That is up 84% year over year. That's some tremendous growth. And here's another big one. Streaming advertising revenue is up 26%. Of course, these are for the folks that subscribe to Paramount Plus that do not have the ad-free tier. They have the lower tier with the ads. That ad revenue is going up, of course, as the programming gets better, as more people are watching, as more subscribers come in. Again, this is the kind of thing that they need to get going. Now, their linear and cable networks, same story, especially their linear content, which involves a lot of live sports. So that's going to get them a tremendous amount of revenue. Look, live sports, especially like what they have, the deal with the NFL for the AFC, the American Football Conference, that's one of the biggest money drivers that any television station could possibly hope for. Live sports is still by far and away the king when it comes to advertising revenue. Nothing else comes remotely close to what you can get from that. So that is definitely a strong point for Paramount moving forward. And I think we're going to see more and more of that lend itself into the streaming service as time goes on. And then just a bit more detail, the filmed entertainment reporting segments. And again, this is one of these things that we don't get breakdowns of like this, is raw and as simplistic as this breakdown is, it's still more, in my opinion, than we get from a lot of other studio and film distributors. Theatrical revenue, as we said, 241. You see licensing and other was almost $3 billion. And if you read, a good bit of that comes from TV shows, very popular shows that they have on other networks or things that they license out to their own streaming service, which then turns around. It's kind of an accounting move where you're moving a piece of cash from one ledger sheet to another ledger inside the same company, but it is a legitimate way to calculate that. But that being said, Paramount did not have a very good year at the box office. However, 2022 hopefully will be a turnaround for them as they have some more bigger pictures coming out this year. A lot of those movies were deferred into 2022 for obvious reasons. Now, I want to get to this part at the bottom because this is probably one of the last key elements I want to touch on. At current, they have $6.3 billion of cash on their balance sheet and another $3.5 billion of undrawn revolving credit. Think of that as a $3.5 billion limit on your credit card. That's what they have. And what that means is, and this is where some of the concern, I believe, comes in, is that how much of that cash is Paramount going to burn off as they continue to drive billions of dollars into the streaming service to build content and to market it? How much of that credit line might they have to tap into for the same reason? And that, I think, is something that people are looking at. Now, where do I think this could be going? This is simple, and this is the wrap-up right here, folks, is that either Paramount is really trying to make a serious run at becoming successful in the streaming marketplace, and just in the last day or two since this news came out, we've had them drop a bunch of news, including a new Star Trek movie with J.J. Abrams' Bad Robot coming back, and I know I can hear the groans out there already. That being said, I do love that cast. The movies, for good or ill, that cast is outstanding, and it seems like they're all coming back, and Paramount is hoping for this to be a big driver for them. They need to get excitement about their stations, their streaming services, and things like this. Unfortunately, the Star Trek shows they have on Paramount Plus don't seem to be, at least according to their report, don't seem to be among the top mentions of those driving new subs and fandom on Paramount Plus. I still can't get over that, but it just makes me smile. I guess they already have too much sunk cost in Bad Robot at this point to walk away, and they just have to ride this train all the way into the ground. Who knows? I'm sure there's a lot of big Star Trek Discovery fans out there watching this video right now. I'm sure not. But anyway, that's the highs and the lows of this. Let me know what you think about all this, because one last thought I will leave you is, apart from just wanting to actually make a run at this, I wonder how attractive they look right now with all of this in production. And as much as they've been beat up, would an Amazon or an Apple be interested in coming in to buy them out? It's a thought. Now, if that does happen, I can almost promise you this. I highly doubt an Apple or an Amazon would want to purchase a linear broadcast television network at this point. I could honestly see Paramount considering selling off the streaming side of things and retaining the regular linear broadcast, because that's a totally different animal. Anyway, let me know what you think in the comments below. Good to see everybody out there. Hit that like and subscribe button. Hit that notification bell. Do leave a comment before you head out the door. And as always, take care.